Markets slipped to the day's low. The Sensex and the Nifty see a 0.5% cut each, led lower by auto and tech stocks. Financials eke out some gains.
Telecom Minister Jyotiraditya Scindia stirs things up with his comment that Satcom spectrum will be allocated, not auctioned as industry desires, on terms set by the TRAI. He adds that tariff hikes are needed to sustain the investments.
HDFC Life Insurance CEO Vibha Padalkar tells CNBC-TV18 that they have opted to focus on growing their customer base with some sacrifice on margins. She, however, sees margins improving in the second half of the year.
Angel One CEO Dinesh Thakkar tells CNBC-TV18 that SEBI's revised F&O rules can impact turnover in the segment by 20 to 24% and the brokerage's income could dip 13 to 14% following the recent revisions, but he expects business growth to help offset the impact going forward.
Very good afternoon. You're watching Halftime Report. I'm Ekta Batra and with me is Hormuz Fatakia. Well, it's turning out to be a session where we're seeing a sudden dip which has come into the markets. We've recovered from the day's low, but nonetheless still weak at this point in time. So we have the Nifty, which is down around 100 odd points. We have the mid-cap index, which is shed over 200 odd points, and the bank Nifty, which is just about holding its head above the water. What probably stands out today is the advanced decline ratio, which is on the declining side. So let's see whether there's any kind of improvement in that. And the India VIX, which has jumped up around 3 odd % as well. So just do watch out for the India VIX, which is up now around 2.5 odd %. But nonetheless, we do have gold prices, which have hit record highs based on the rupee depreciation as well as probably risk-off sentiment. So that's probably where the trend is, a little bit of risk-off, as you can see on the screen. A lot of results today. Bajaj Auto, Emphasis to name a few, and tomorrow as well, Infosys, Wipro, LTI, Mindtree, Axis Bank, one of the big first corporate banks which will hit the screen in terms of numbers, Nestle, Havells. So a lot to watch out for in terms of commentary as well as cues.
Good afternoon, Ekta. And it's not been a very good day. It's not been a very good week, actually, for the last couple of days. The trend that you're seeing, that the higher levels continue to get sold into. Even yesterday, you could not cross that 25,200 mark on the Nifty. Today has been a similar story. We fell to the lowest point of the day, which was around 24,900. So the Nifty remains locked in that range of 24,900 to around about 25,200 on the upside. If we go below 24,900, then the lower levels come into play, which is the September 9 low of 24,750, and then of course the last week low that we made, which was 24,693. Those come into play on the index. What is not doing well is the auto index. That continues to be the top sectoral loser ahead of Bajaj Auto's results later in the day. So that is not having a very good day in today's session, as is IT. But the other sector that is not having a very good day, Ekta, is pharma. What's happening there?
Well, yes. Well, I'm looking at a couple of stocks which are in focus in today's trading session, which is Strides as well as Zydus. So I'm going to start with, Strides, which is in focus because they had announced a particular piece of restructuring a couple of months ago with regards to OneSource, which is formerly Stelis Biopharma, and which will now be a specialty pharma pure play CDMO company. So it will have the Stelis Biologics CDMO business, it will have a complex injectables business, and it'll have Strides soft gelatin business. So it's going to be a combination of that. So what they have announced today is that OneSource has received equity commitments of around 801 crores or $95 million from investors. And the pre-money equity valuation of OneSource is 1.65 billion. The fundraise is being led by HBM Healthcare and associated investors. There's additional participation from the likes of White Oak Capital, Param Capital, Motilal Oswal, Enam, SBI Life Insurance. The company has said that the embedded value of around 633 rupees per share for Strides holding in OneSource is now at an 82% premium as compared to what it was in September of 2023. So this is basically what the update is on Strides, where OneSource has got a pre-money equity valuation of $1.65 billion and equity commitments of 801 crores. I assume that it's probably going to be listed in the first half of 2025. The other one that I'm watching is Zydus, which is where there's news on a cancer drug in the US. And what has actually taken place is that a US court has ruled in favor of the innovator company Exelixis on a drug which is used for cancer, which is carboxylinib generic. So they've said that basically the generic defendant, which is MSN in this case, does not have a claim over the patent, or the patent litigation didn't go in favor of MSN, and MSN and Zydus are partners. So that's the reason why Zydus is down, because their partner in the US, MSN, has lost a case on this particular drug. Now MSN, what will happen is that this is a large drug, $1.6 billion. The street was assuming they'll launch in FY27, so Zydus will get some benefit FY27 onwards, but now it's probably pushed to FY30 or 2030. So there's a delay in terms of the possible launch. There will be a delay in possible earnings. And just to put it into perspective, there are a lot of drugs going off patent in the next couple of years for not going off patent, rather getting more competition, such as Revlimid generic as well as Mybetriq generic. So Zydus's earnings will be under pressure. So the street was compensating this as probably one of the earnings fillip, which now might get delayed.
And a delay is very significant at that one, right? Because you're planning to launch in FY27, now probably gets pushed to FY30. So that's a 3-year delay, and it's showing up on the stock price as well, right? 4.5% lower there.
Yes, but this is normal course of business for the US generic companies. We've heard this about Mybetriq. We just discussed Mybetriq generic. There's Entresto, we discussed that with Divi's yesterday, that there's always a risk to litigation. It's always a risk in terms of first to file and patent challenges in the US, and that's a result of that.
We'll pose that question to Vishal Manchanda as well, right, who's pharma analyst at Systematics, who is joining us now on the show. Vishal, good afternoon. Thank you so much for joining in. You just heard Ekta on this news flow that has come in for Zydus. How negative do you see this as a development for Zydus based on the news that you just heard?
Hi, good afternoon. I think so. This was, as Ekta said, this was supposed to take care of the post-Revlimid decline that was anticipated in FY27. So now with this drug getting pushed to FY30, there is nothing that Zydus can fill up with. While they obviously can leverage their cash position to acquire something to kind of fill the hole that Revlimid would leave. But we have to wait and see how they do that. And again, Revlimid is so replacing Revlimid is a challenge, because that was a high value opportunity. I think so for someone to replace Revlimid. So say if Revlimid was a $100 million drug, to replace that they would need something around $600 million or more on top line, because margins is something that we also need to understand. Revlimid was a very high margin product. So a very uphill task, and the task has become a bit more difficult for them now.
Vishal, any numbers in terms of what the anticipated revenue was from this particular cancer drug FY27 onwards?
So I think this was a $1.6 billion top line opportunity for the innovator. So assuming the exclusivity would have been triggered in that year, they would have got 6 months of exclusive position. It would have been a meaningful product. They could have added about almost $250 million on top line for the combined entities, Zydus and MSN, and then there would have been a margin flow. So since this was a partnered opportunity, my sense is the margins would not have been comparable to Revlimid, but much lower, say maybe around 25-30% at best.
Okay. The other news is on Strides, their one source business, which will eventually be listed by the first half of next calendar year, is going to see some amount of fundraising, a pre-IPO fundraise. What is your reading of that? 800 odd crores, and the pre-equity valuation is 1.65 billion.
Right. And so I think OneSource is into an exciting space. So they are into contract development and manufacturing, plus they are also into biologics. They are doing something around GLP-1s also on the contract manufacturing side. So I think all of this put together, there is all of these requires humongous funding, because as we know, these assets, biological assets, will require immense amount of investment in terms of the fixed cost, the upfront capital cost. So the valuations are encouraging at $1.6 billion. So a significant premium to the last valuation they had, around $900 million is where they had pegged the valuation to be. But I think there's a long runway from here in terms of the monetization of the opportunities. We'll have to be patient and also be aware of the risks that go along such investments.
Quickly, if you can tell us, why is most of pharma down? Is there fear of maybe the US elections, what comes out of, any kind of Medicare pricing, which we've discussed some time ago with regards to generic pricing? Or do you think that there's just profit booking because of the kind of run-up that we've seen?
I think there is some amount of caution that is setting into the sector. We are also seeing some. We have always been seeing. I think the sector has been witnessing good news for quite some time. Now I think with this, this Zydus news flow is a bit negative, and we have to be aware. The US will always be volatile in terms of the development. We'll see both sides. We'll see some very exciting development, and we'll see things going the other way around. Even compliance is something that's not getting factored into the price right now. So I would say the prices currently were on the optimistic side. There is some caution setting in now, and I think it's better the price is correct and there is the risk reward becomes favorable then.
All right, Vishal, thanks a lot for sparing time and telling us your views on the stocks in the pharma space that's in the news. Well, no amount of time is enough to discuss pharma, such a broad gamut at the sector that it is. But we have to call time on this conversation for sure. We take a short break here on Halftime Report and back with more buzzing stocks on the other side. Stay tuned, we'll be right back.
Welcome back. Well, let's talk about certain stocks which are in focus. We have Rallis, which is in focus. It is reacting to what is a good set of Q2 numbers. Sunil is here to tell us more.
Well, yes, it's a strong set reported by the company, and that is what the street seems to like because it has come in after quarters of disappointment. If you look at the numbers, revenues are up 11%, EBITDA has increased by 24%, profits have come in at 98 crore rupees versus 82 crore rupees. Even sequentially, it's a good growth that the company has seen. And both the segments, the crop care and the seed business, has done well for the company. In the crop care segment, EBITDA is up 5%. The company says this is because of volume growth and better cost management. The domestic crop care volumes, they were up 17%, but there are still pricing pressures that the industry is facing. So 11% drop in pricing here. The export volumes, they were flat, but there was a pricing decline, and that's why export export revenues were down 9% this time around. If you talk about the seeds business, revenues were up 48%. So strong growth here in the seeds business this time because of better Kharif liquidation. EBITDA increased on account of higher sales, helping in positive operating leverage. So most of the things work for the company this time around, and they are positive on the outlook as well. And that's why that big surge in stock price.
15.5% higher is Rallis. Thanks a lot, Sonal, for that update. Very good quarter there from Rallis India. But on the flip side, what is not having a very good day is BSE, and that comes after days of having a stellar run. The stock has now been downgraded by Jefferies. Vamakshi is joining in with more details on that. Vamakshi.
Well, Hormaz, yes, not such a great day for BSE. Jefferies has gone ahead and downgraded its rating on BSE to underperform. However, they've raised their target price to 3,500 per share. Largely, they say that the stock has seen a run-up of over 100% post-release of SEBI's new F&O framework, led by expectations that BSE could gain some market share from NSE. Now, this also assumes that they're assuming a 25% hit to the overall market volumes. BSE's valuation, given that, is at a price-to-earnings ratio of 40 times FY26 estimates, which implies that market share could rise from 13% in the second quarter to 30 to 35% going forward, with a 40 to 50% share share in the weekly contracts. Now, Jefferies believes that this is very stretched. They also say that this fails to capture risks that could come from higher impact on the overall market, lower spillover gains and further regulations. They see near-term risk reward as unfavorable. So given those factors, it's a thumbs down coming in from Jefferies on BSE. Resultantly, the stock is taking a knock in the trading session today.
Okay, yes, absolutely. It has seen a strong run-up, but that downgrade definitely impacting the stock today. So down around 4.5% odd. Thanks very much for that. We'll take a short break. On the other side, Nigel will tell us about what's taking place in the futures and options space today.
Welcome back to Halftime Report. The Nifty continues to hover around that mark of 24,950. Some results flashing on your screen as well for South Indian Bank. The net interest income is up 6%. We'll get you more details on that in just a bit. But Nigel is joining in now with how the setups are looking like on the FNO front on the Nifty Bank weekly expiry day. Nigel, good afternoon.
Well, that's right. You know, Hormuz, earlier today I made this point that I'm expecting the Nifty Bank to actually outperform what the Nifty is doing, because in the last couple of sessions it's been coming back to life, and even in yesterday's trading session the dip was got bought into. And as we speak, the index that was down close to 200 points, that's just moved into the green. So I expect a relative outperformance from the Nifty Bank. And as you correctly mentioned, today is weekly expiry day. On the Nifty, it seems the call writers are getting overconfident, you know, because the Nifty PCR has now come down to around 0.7. How does that happen? Because the amount of call writing is moving up. And just take a look at the 25,000 call, 25,100 call, 25,200 call. All of them are seeing a fair bit of open interest build up. This contract expires tomorrow. And the bears believe that they can defend the recent high. But, you know, that could be that could be one of the reasons that we see a bit of a bounce if we can get some good news coming in from somewhere. Because as of now, the positioning is such that we don't get past the 25,250 odd mark. And that's the chart that we're looking at on the screen. This morning, we opened near the 50 DMA, but we couldn't trade above those levels. We're still 80 points away from those levels. So first, you like the Nifty to conquer the 50 and then move to around the 20 DMA. That's going to be an important mark. The Nifty Bank, that 51,500 mark, that becomes the first level of support on the downside. And that's where the 50 DMA is also at. In terms of stocks that I'm looking at, well, HDFC AMC, that's seeing a big fresh build up is what we're seeing. Open interest is up more than 10%. The stock is up close to around 5%. HDFC Life made this point earlier that yesterday positioning was such that any kind of good news will lead to a bit of a bounce. And the shorts are covering out because yesterday there were big shorts that got into the system. And finally, a couple of pharma names, Ipca Laboratories as well as Glenmark. Both of them are down in today's trading session, but there is some unwinding of long positions. Open interest sharply lower on both these two counters. So let's see whether or not the Nifty Bank can fight back. But otherwise, that's the one that's actually looking like it will relatively outperform the Nifty. Back to you.
Okay, all right, Nigel, thanks very much for that. So that's on the FNO space. Well, for South Indian Bank, the asset quality looks quite stable at this point in time. So there's no real big movement which has taken place in terms of the gross NPAs as well as the net NPAs. So the gross NPA stands at around 4.4% versus 4.5% and 1.3% versus 1.4% sequentially for the net NPAs. In fact, there's an improvement which has taken place marginally on the asset quality. So stable to marginal improvement is what you've seen. And that's the reason that you're probably seeing the stock higher by around 3.8%. So stable set of numbers. We'll wait by for the commentary as well as the presentation to get to know more. We'll take a short break, but we'll get you more on the stocks once we're back. Stay tuned. Welcome back. Well, let us now shift focus to Waaree Energies. The company's 4,300 crore IPO will open for subscription on the 21st of October and close on the 23rd. The management says that they will use 2,750 crores of the fresh issue for part financing of the establishment of manufacturing facilities in Odisha. Rima caught up with Hitesh Chimanlal Doshi, who's the chairman and MD, and Sonal Srivastav, who's the CFO of the company. Listen in.
So talking about your financials, so last year you had a very solid growth of I think close to about 68%. But in Q1, revenue growth moderated to 2.5%. What was the reason for that?
See, we continue to focus on expansion of our module sales. We will do that. The prices did soften a bit. However, like I said earlier, we focused completely on our margin. So in spite of a revenue growing 2.3% odds, our actually costs grew less than 1%. And therefore, it helped us in the margin expansion. I think as we go along, that's going to be our focus. How do you and with technology, we do expect price points to evolve, and so will the cost.
So since the focus is on margin expansion, your margins today stand at closer to 18%.
Correct.
Around. What is the goal with evolving technology, improving efficiency, value addition, etc.? Where do you think you can take your margins?
We will see how it evolves. I can only say that we have certain strategic direction which will help us on the cost, especially with our own modules coming on, cells coming online. And as we expand there, our own US expansion coming as well. And a good mix of export and domestic, I think margin expansion will play out.
Okay, so margin expansions should continue from
we will continue to focus on our costs, so that's where we will get at.
What is cost today? What is the cost of production per unit?
Cost of production today is ranging about 15 cents to 16 cents.
And you sell in the market at?
It's a higher, so for the quarter it was about 19 to 20 cents. And it was you will see both costs and prices were higher last year. So as it evolves, both like I said, we focus on the gross margin. So as the price evolves, we also look at how we will manage the cost.
And how has your cost of production come down because of technology? So today you gave us a number. What was it, say, a year back?
A year back, of course, it was higher. It was ranging more around 18 to 19 cents. Also because of input prices, So they really move in tandem, and it all depends on how we are managing that, both from sourcing point of view as well as efficiency on the production line.
Mr. Doshi, exports, right? You are, I think, India's leading exporter of solar modules. But exports, as a percentage of your overall revenues, has been very volatile. 1 year it's 68%, then it goes down to 23%. In Q1, your exports dropped 54%. Explain that to us.
Like Sonalji said, as you know, we have a very large order book, and it is constantly growing. So when you're focusing on the margin, you have the choice to choose on the orders, and when you have the large order book. So that luxury of the order book gives us the opportunity to choose time to time which order is good for the organization and good for customers also. Sometimes customers have the challenge of executing the project or they delay the project due to the certain issues, or at that time you get this opportunity to choose the orders. Domestic, it is ranging between 17 to 25% quarter on quarter. And that again, if you choose a more export in this quarter, your market share in India comes down. So you choose more local.
But export margins are higher.
At this moment, yes.
How much higher?
Around again 300 to 350 basis points.
300 to 300. So let's talk about CapEx. As I can see, I think you have 3 levels of CapEx coming on board. There is a solar cell coming up in Chikli, you've got US, and a large one in Odisha, 6 gigawatts. Just tell us all your CapEx plans.
The cell capex, it's ongoing, and it should be completed in the in the current fiscal.
Q4 of this fiscal year?
Yes.
And the size?
The size is about 2,500 to 2,600, and it's coming to an end. It has been funded already. We are looking for a capex of additional 9,500. 500 is for the US operations, and 9,000 crore is going to be for the Orissa operations, which will be an integrated facility of 6 gigawatt module, cell and wafer ingots.
And all this, so you said the Chikli one, solar cell in Gujarat, comes on board in Q4 of FY25. What about US and what about the Odisha plant?
So US also, we will be putting it on stream this fiscal as well. The capacity will be 1.6 gigawatt for US. This is the first phase. And for Orissa, we are targeting about 2 years, so fiscal 27.
So once, Mr. Doshi, by FY27, all your capex should be completed, right?
Right.
At least as of the visibility that we have today. I know you're constant. Okay. So your capacity today is, I think, a little more than 30 gigawatts.
Yeah.
What would that number go up to by FY27?
It will be 21.
21.
In the modules. Cells will be 11. Ingot and wafers will be 6 each.
Okay. And today you have no solar cell manufacturing capacity. Everything is imported.
Right.
Okay. So that's... So
we buy the domestically also.
You know, sir, but you're adding a lot of capacity. From 13, you go up to 21, but your capacity utilization is only 45%.
Right. Let's see how Wari is working. Wari has been always ahead of the technology. Even in the last exhibition we were the first in India to introduce 730 watt module. So when you're constantly changing the production lines, you're coming up with the new products, you're not able to utilize the capacity which is normally 60-70%. So if you look to some of our lines, they are above 70% today. Some of the lines we are changing the equipment. We change our equipment continuously to give the latest products offering to our customers. And not only the product in terms of the output, but the technology, reliability, longer the life. And that definitely brings some pressures on the capacity utilization.
Fair enough, got that point. So out of your total capacity of about 13 gigawatt, currently what percentage of it is upgraded to the latest technology?
Almost 90% plus. For example, we don't have the line.
Then you should be operating at higher capacity utilization.
The capacity expansion is so fast. We moved from poly to the mono.
To top car.
Till we stabilize now top car. And the model we launched in the last exhibition is HJT. Okay. Right? And it's not full stop there. Our team is already working on the what's next to the HJT. And
so
this will keep on coming.
capacity utilization should stay at these levels in a business where technology is constantly adapting and improvising, or is there scope to push it up to 60-70%?
It's very good scope to push to the 60-70%. Probably you will see in the coming days. Yeah.
You will see capacity rising. So that should further push up your margins and the kind of top line that you do. So your annual report also states that the group company is planning to set up a 3.5 gigawatt lithium ion cell plant. Can you tell us under which listed entity will this be in, and give us some timelines and what your plans is, because this is public. It's a part of your annual report which you've shared with all shareholders. So they'd like to know a little bit more. And will it come under Wari Energies?
As a company or as a group, we are committed for the energy transition, and we'll continue to grow into the new technologies, new products. If you look to, we won recently for the hydrogen PLI also, and we had bidded for the battery PLI also. So we'll continue in a complete energy transition. It looks a solar company, but if you look to the annual report in detail or our RHP in detail, we are working in the entire energy transition space. Because we strongly believe this is, the Wari is committed, whatever the electron we are seeing in the electricity here, it has to come from the green energy. Batteries will definitely come. Now which company, when, the time will speak about that in future.
So you haven't decided it will be housed
Not
under
at
which?
this moment.
Where do you think it makes most sense?
Not decided anything. Probably post IPO, we'll talk to our team, our investors, bankers.
And any timeline?
As I said, we had already applied for the PLI, and we'll continue to, and we are working on this direction.
Another upcoming IPO, Wari Energies. Keep an eye out on that one on the 21st of October. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be back on the other side. Back with us here on Halftime Report. Earlier today, we spoke to the management of Angel One, who spoke about the drop in F&O volumes, where he said that he's expecting a 20 to 22% drop there because of the new F&O regulations that market regulator SEBI had received. He spoke about a whole host of things as well. Listen into what he had to say.
Saying a label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that. I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum. It's not going to happen that way. Because we have seen that there is a stickiness on platform. So people who are used to like certain products, they don't shift very easily till the time there is a big drastic kind of like thing which they have to do it compulsorily. If you look at contract size was reduced in April 2024, we did not see any big benefit to neither to exchange nor to this thing. So there can be a temporary kind of like blip in volume for 1 quarter or maybe 1 month. The people were not aware that contract size has reduced. Similarly, I feel when contract size would be increased, ticket sizes increase and lesser number of weekly option, that is not going to create a big shift from one exchange to other exchange or one broker to other broker.
Okay, we'll take a break on that note, but on the other side, Manisha Gupta will join in. She's going to take us through what she's tracking in the commodity space today.
Welcome back, and joining us on the show now is Siddharth Srivastava. He's head ETF product and fund management at Mirae Assets. Siddharth, hi, thank you so much for joining us. And gold is a bandwagon which everybody wants to jump into right now with the kind of all-time highs and run-up that we've seen in prices. At your fund house, what is the sense with gold? How are you treating this as an asset class?
So I'll obviously talk from a performance point of view because that is what caught the eye of a lot of investors. So right now, obviously gold has run up significantly in last 1 year or so, almost seeing an up movement of almost 30% in last 1 year. So it has in fact outperformed Nifty. Even when we are looking from a 3-year point of view, gold has given almost 16% return compared to just 12% of Nifty 50. But we think that this will sort of persist. We expect from a near-term gold to be in the range of 78,000. Right now it's around 75.5. So we think that there is some room left for gold to rally further. And also from a long-term point of view, I think we have already, the industry has talked about it, that with lower correlation with equity, etc., it makes a very good asset class to form part of any investor's portfolio.
Oh, well, absolutely. Siddharth, your fund's opening up today, and I mean, as you rightly said, there is still much upside there. And from a 1-year perspective to a 3-year perspective, as you mentioned, gold has given very strong returns. But when it comes to gold ETFs, and there are various other fund houses also into the space here, how are you looking at, one, the participation within the Indian markets? And when you look at the Indian ETFs versus gold global ETF numbers, would you say India has a lot of room on the higher side?
Yeah, so in last 1 year, we have seen almost 8,800 crores flowing into gold ETFs. In fact, in last 6 months, the number is around 5,500 crores, and September alone pulled 1,200 crores in gold ETFs. So we are seeing a reasonable rally, sorts of not only gold prices, but also in terms of inflows in gold ETFs domestically. Now, also interestingly, when we look from a global point of view, you are seeing not so much of inflows till April, but now we are seeing positive inflows in gold ETF globally also. So last 4 months have been very good for gold ETF flows globally, and I think everything is sort of aligning. If you look at parameters, US has started cutting the interest rates. You have central banks buying gold, lowering their dependency on US treasuries. Then you have geopolitical issues, and also now we are seeing interest building up gold ETF globally. And also if you look at in gold futures market at COMEX, you are seeing increased net long position. So I think there are a lot of tailwinds which are supporting the gold prices right now, and I think that is going to persist for some time.
So, Siddharth, when it comes to Mirae, are you looking at gold as a very long-term business proposition here? And with gold done, can we expect silver ETFs as next?
So right now, gold looks good from a tactical allocation point of view also. And gold as an asset class, I think should be in an investor's portfolio up to almost 10%, because as I mentioned, that it has lower correlation with equities and does well when equities typically does not perform. Now on silver, we are a bit more bullish. We see that within next year or so, silver can touch or cross 1 lakh mark. It is right now at almost 89,000, 90,000. So a bit more bullish on silver. We see that rally in silver may be a bit more stronger in coming times, while silver also has given almost 29% return in last 1 year. So a bit more bullish on silver, but silver has always been a very volatile commodity, so people should obviously a bit more cautious when they take exposure in silver compared to gold, which we believe is needs to be part of an investor portfolio from a long-term point of view.
Siddharth, a quick final question. And when it comes to gold ETFs itself, what kind of participation are you anticipating on this one, given, as you said, the month of September has been quite strong by itself? What you have done as back-of-envelope calculations for yourself?
So I think this inflow sorts of will persist. We in fact launched gold ETF a while back and silver ETF a while back, and we are seeing good inflows in both schemes. And I think equity markets, the level at which people are obviously sorts of diversifying, moving into other asset classes, and gold and silver are right now the investors' favorite when they are looking at other opportunities. And I think the inflows will persist, and we also hope for good participation in our NFO.
All right, so after gold and silver ETFs, this is Fund of Funds that has been launched by Mira, and as Siddharth tells us that the expectations are good in sense of participation, and the products really seem to be doing quite well, the ones that have been already launched. Siddharth, as always, thank you so much for joining us and talking to us about gold, prices, and of course the ETFs there. With that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.